Let's turn to David Heger right now to talk more about Disney's dominance of the box office and where it goes from here. He's senior equity analyst at Edward Jones. Thanks for joining us tonight.
Thank you.
What a juggernaut. I mean, Julia is pointing out that they've got a slate of more Marvel movies coming out over the next few years. You've got more Star Wars movies, some of the classics that they're bringing back. I mean, are there any weaknesses in the Disney studios right now that you can see?
Well, certainly from the studio point of view, the company looks poised for a very strong rest of the year with the upcoming movies still to go, and obviously so far have been pretty much blowing all the other studios out of the water. But certainly the studio business can be tough in terms of when it gets to be next year, how do you repeat that success and continue to show growth? And so certainly that will be a challenge as we move into 2020 and see what Disney can pull off next at the box office.
Obviously, they have a huge slate, as Bill pointed out, but if you had to pick a major competitor for Disney, especially now that they've combined with those Fox assets, would it be a Netflix? Who would it be?
Well, certainly it depends on which part of the business you're talking about, and we see Netflix certainly as a large competitor, somewhat a competitor in their traditional media business, where unfortunately we're seeing losses of pay TV subscribers, which is impacting that part of the business. And so that's where then Disney's going to tap into that strong vault of content that they have with the Disney Plus service that'll be rolling out in November. And Disney will then be looking to start driving growth from recurring revenue from the Disney Plus service and really tap into that strong content that they've got.
Is the strength of the studios enough to cover some of the potential weaknesses elsewhere in the business? For example, I mean, it's a good time to be starting a streaming service that might be losing money for a few years while you got a studio that's making all the money right now, right?
Right, and that's one of the nice things Disney has is they've got kind of multiple levers they can pull in terms of driving growth in the interim. Even the traditional media businesses are not seeing revenue declines. They still are flat to modest growth and a good cash flow generator. And then the parks business is seeing very consistent growth as Disney invests a lot in the parks, and you're rolling out new attractions. The new Star Wars attraction at Disneyland,
right.
It's been very successful. So and then finally, those parts of the business I think can help support the investment that'll be needed for Disney Plus.
Walt Disney's out there smiling somewhere, that's for sure. David Heger with Edward Jones. Again, thanks for joining us tonight.
Thank you.